Most traders lose money in the Forex market. And that is the truth. 90% of traders are losing money in the Forex market. So the probability says that 9 people out of 10 watching this video right now are probably losing money in the Forex market. And the biggest reason why you are losing money in the Forex market is you do not understand market direction. If you continue not to understand market direction, you will lose money consistently in the Forex market. This video here is here to structure you and teach you market direction so you understand the overall flow of the river, the overall flow of the current, so that you make smarter decisions and become smarter traders and ultimately make money in the Forex market. By the end of this video, I hope and I believe that you will be able to break down a price chart, look at the market and say the market is going in this direction and the probability of it going in this other direction is lower, and you will begin to make informed, smarter choices. Let's get started. We are starting off on the gold chart. What we have here now is the weekly time frame. The biggest determinant of your trading is understanding the overall flow of the river, and the overall flow of the river starts from the higher time frames. Most traders are not going to be positional traders. Most traders are either scalpers, swing traders, or intraday traders, which means you are trading either within a day or within a couple of days. Most traders trade in this manner. What it means is that you have to now use the bigger movement and flow of the river to determine your price move. When you are on the weekly time frame, the first thing we do, first mark out the trend line. 2, we mark out the key level. Let's start with the trend lines. Now, I have the trend line marked out here. This is just a simple trend line. Let's reset the chart. So we have this trend line here for the price first touch, second touch, and third touch, which is around here. So this is the trend line that the price is currently acting on. When we talk about key levels, we talk about it on a time frame by time frame basis. Now, on the weekly time frame, this is the high that was broken, it became a key level, and this is the other high that price has not yet broken. So these are the two things sticking out now on the weekly time frame. Let's go to the daily time frame. Now, on the daily time frame, what do we see? On the daily time frame, we also repeat what we did on the weekly time frame, which is we look for the trend line that price is acting on currently and the key level price is acting on currently. Because this trend line has done its bit, we rein it back a bit. Now, we look for the key levels. What are these key levels? The first thing I look for is I look at the market trend here. If you don't understand higher highs and higher lows, highs and lows, you can check my previous video to have a better understanding on what this all entails. So price has broken this low, changed direction, and came back up here. When it came back up here, it formed this high, which became a triple top. So price formed this high. It first broke here, retested, came up, formed this high. So it formed this triple top. Now, within this triple top formation, this is a reversal pattern. It is a reversal pattern. When price broke this level, this was a very bearish indication, but not for long, because for me, looking at this whole structure at this point, price is bearish. Now, if you look at this here, there isn't really much to go off of because we just have this level here, and the other level we can be looking at is somewhere here. Why am I marking it out like this? This is a high that broke this low, became a low. This one came back here and formed the high. So I'm marking the highs and lows. Very important. I'm just basically marking the highs and the lows. Let me make this a bit darker so it's clearer a bit. Now let's go to the 4-hour time frame. Now this is where the magic begins to happen. Because you have done all this work on the higher time frames, you are beginning to have a picture of where the market is, where price is being squeezed at, the location where price is at. Everything you do not trade against the 4-hour time frame. I repeat, do not trade against the 4-hour time frame, especially if you are scalping or intraday. The 4-hour time frame determines the price action movement within a period of time. It is a very, very important time frame. Now, when we have a higher time frame level, like the trend line and the key level, we wait for price to tap it. When price taps it, we ask ourselves, is price breaking above it, or is price tapping it to reverse? If price is breaking above it, we look for the continuation. I will break down so many charts so that you begin to understand these concepts better. Now, what do we have here? We have this 4-hour time frame, and what has the 4-hour time frame done? If you look here, price came here, formed this low after this triple top, broke it. Remember, at this point we were looking for selling indication. Price broke it, came up. A small intraday setup would have been around here for those who were willing to take it. Now, price has come down, and price did not form a lower low. It didn't form a low. Rather, it formed a higher low, and it is now forming a higher high by breaking this point. Okay, now, what does that mean? If the overall time frame is still bearish, should we be taking anything like sells at this point, like buys rather at this point? No, we should be careful. We should understand that this price has given so much bearish indication by doing this, breaking this low, coming back to form a triple top, 1, 2, 3, breaking structure, and still coming back now. This might be just a retest to somewhere at these levels to continue this move down below. You might be wanting to do this. So, market direction is basically flowing with the overall river, the overall direction of the river. Price has violated lows. Why should you start to buy arbitrarily? Focus on the lows that price has been maintaining. That is it. It has been breaking lows, forming sells. Now, this is the first high price is breaking. Be careful about beginning to shift your bias quickly, considering also that you have a strong level here. If price begins to break this higher time frame trend line and gives you confirmations, you can now begin to buy. Now, how does this tie into the reason for this lesson? The reason for this lesson is, do not go against the direction of the higher time frames. Focus on the price action and reversal patterns that the higher time frame is forming. Focus on that. So for now, what you should be looking for is for price to break down and begin to give you bearish indication to at least this level. Now, for bullish indication, we have to now begin to break this level and you look for your buys. So for now, the best thing for anyone is to sit on your hands. One of the ways to avoid losing money is to be patient and understand that you have to be smart about price. If you begin to take this trade, fine, it might work out for you, but don't expect a higher target. You should know that something here is enough for you. Do not expect a long move. you shouldn't expect to be targeting somewhere here. If you target here and you get out here, it is okay. But overall, what you should be looking out for is for price to give you more 4-hour bearish structure to continue the sales. But remember, as I say, do not trade against the structure that price is forming. What do I mean by that? As I've already explained, if you see a trend line like this, price has formed this, mark this, why should you get here and still be selling? Are you not using your senses? When price gets here, you can either wait for the reversal to continue after price has broken 4-hour structure, or you wait for price to break this structure here cleanly. Very important. You must break the structure cleanly. Then you take the retest down to here, not more than here, because this is a key level. Trade from levels to levels. Know where there is a big resistance coming in, big support coming in, big trend line coming in from the higher time frames, and trade to that level. When you get there, you wait for price to show its hand before you make the next move. I will repeat that for better clarity. Wait for price to get to a higher time frame level, then show its hand. How does it show its hand? It either breaks that level and gives you continuation indication, or price reverses and gives you continuation indication. But remember, the 4-hour time frame must shift before you make any decision. Very, very, very important. Let's look at GBP USD. We will start from the weekly time frame. I'm trying to take all these examples so that we can drill this whole concept home and everyone understands it. Now, the first thing we do was we mark our trend lines. Good. We've marked these trend lines, and what has price done? Price has just broken it here. Now, is this a fake out? Well, we will see. Let's proceed. What else do? We look for the obvious levels on the daily. We see this level here, which is a low. Very obvious. We mark it. Another previous obvious level was this point here. We saw this place was a high. Price broke it, retested it here. Let me bring it a bit closer. We saw that this level was a low. Price came to this high, broke. Price went up, retested this level, went up again. So this was a low. I look for highs and lows, highs, lows, highs, lows. Price came and retested it. So that level was an important key level. We have finished marking out everything on the weekly time frame. Let's go to the daily time frame. Now, on the daily time frame, I will delete this level just for clarity. What do we have? Price has gotten to this point here. Good. This level, this daily support. Exactly. Now, this is where this lesson now begins to take shape. But before then, like I say, let's mark our trend line on the daily. We have this daily trend line. The price is forming. This is the trend line, the meat of this cell on the daily time frame. This is it. Now, price has gotten to this level. This is where it becomes important. We don't do anything yet. We either wait for price to break below here, or for price to reverse on the 4-hour, then continue the market. We don't do anything here. Let's go to the 4-hour. Now, on the 4-hour time frame, we still repeat what we have been discussing. I will draw my 4-hour key level, which is something like this. Very important. I'll also draw this trend line here. I will delete this daily trend line just to keep everything clean, because this is a more recent trend line that price is just acting from. For me, I already know that the reason why I'm deleting that daily trend line, I will show you. This is the daily trend line. And for me, the daily trend line is already close to this 4-hour trend line. So we can delete it with an understanding that here, okay, I think for those who it will confuse, you can still leave it. Let me just leave it so that there is no confusion. Now, on the 4-hour time frame, what do we have? There are two things you can do. Because the daily time frame, now take note, let me go back to the daily. Now we're on the daily time frame. Because this daily time frame has been quite bearish, if the 4-hour is bearish, you can take sales at 4-hour key levels. Now, the only problem here is, because we have gotten to this daily level, we have to be much more careful. So if price comes up to this key level with this trend line, you can look for a bearish pattern to continue sales. But you cannot target past here for a double bottom. If this is your thing, you can't target past here for a double bottom. I'll just delete the weekly trend line to keep things clean. Because when you begin to target past here for a double bottom, you are making a big mistake. You must concentrate you must understand that because we are at this daily key level, if price makes a double bottom here, it is most likely going to break past all these things and give you bullish price actions to target all these highs. Very, very important. What this essentially is saying is that know the trend, understand your trend. It is better to move in the time frame. Now, let's say your daily and 4-hour is bullish. Your higher probability of you winning your trade on your entry time frame, say the 1 hour, 30 minutes or 15 minutes is high, because your higher time frame, which is the daily and 4-hour, is bullish. If your weekly is bullish, your daily is bullish, your 4-hour is bullish, the probability increases. So the higher time frame that you can stack in your favor in the same market direction is how you make money in this thing. So if your weekly is bullish, your daily is bullish, and your 4-hour is bullish, you are more likely to make more money than someone who only has the weekly and the daily, or someone who has only the daily and the 4-hour. That is just the bottom line. The more higher time frame you can stack in your favor, the higher your chance of winning in this market. So now, for this price action right now, if price comes here, look for your entry pattern. I have several entry patterns, and I will teach that in later videos. But for now, if you have an entry pattern, entry confirmation, you can begin to use them at these key levels. Now, remember, until price breaks this 4-hour high, market hasn't changed. So from this point here down here, you can still take sales. But remember, you can't target it for long. It is just short time intraday sales, because you are at this daily level, this daily support. So until price breaks below it and continues, you can continue your sales comfortably, or you wait for price to break this and continue the buy indication. Very, very important. We are on USD card. This is a weekly time frame on USD card. Now, what do we have? Just immediately you open the chart. What is sticking out? This point here. This point here is just standing out. Also, if you look at this point here, let me zoom into that place. Here, where you have these weeks, here, where price rejected just on that line. I will mark it out also. So basically, I know that inside here, we are at weekly highs. These are COVID highs, long-term highs of almost 10 years ago, 2015, and highs of COVID era, to half a decade ago. Very important highs. So we have to be careful inside here. So where are the key levels? Very, very simply, we have these key levels here. We have these key levels here. So we have boxed up price on the weekly. Good. Let's go to the daily. Now, what do we have on the daily? Let's draw, like we always say, the daily, the trend line. I'm drawing the daily trend line. Where is the daily key level? Nothing at where current price is. So I won't even bother. I just mark this week here. Let's go to the 4 hour. See the way we are building a ladder. It is a ladder. You keep on building it. You build it. You build it. Now, remember this point here, which was a previous high where we talked about on the weekly. Price broke that point and retested it. Everything is repetitive. There is no fluke. It is all repetitive action. So you see how price broke it and retested it. Now, what are the two things we always talk about on each time frame? Trend lines and key levels. Now, the way I draw my trend line, I like to focus on the leg of price. So if you look at here, price came up, down, up, down. So this movement was the meat of the bullish time frame. This was where that bullish time frame was actually working and moving in. Now let's mark this. This is the 4 hour key level, a 4 hour important high. Then I will mark this low here because price has been reacting here 1, 2, 3, 4. So obviously we are in a range, but apart from being in a range, we are on this price is bouncing off of these key levels. Now, the daily time frame is bullish. The 4 hour is bullish. What confirms the 4 hour bullish structure? When it breaks this level and begins to continue. As it breaks a clean break, remember, not a wick, a clean break with a retest is a valid buy, but not for long, just around here, even before this point. Even before this point, not for long, because we are at dangerous key all-time highs. You have to tread carefully at that point. Market direction is just knowing which side are you taking trade. What is the probability of this trade being a success? But understanding the higher time frame and larger picture context in your mind. Understanding that, oh, if I take this buy here, where can I get out? Where should I get out? Not taking the buy arbitrarily and forgetting yourself within that price action and thinking you are going to take the whole move. If the whole time frame, weekly, daily, 4 hour is bearish or is bullish, and there is no higher time frame area of any key level, any trend line that is an obstruction. You now know you have more room. But when you begin to know that you have higher time frame areas that are key levels, resistance, trend lines, you have to be careful how you take such trades. Good. So now, what are we looking for? Like I said, we're looking for this price to break and make that move. At this point, you begin to look for your entry patterns, if it's a trend line confirmation, or if price has to go up a bit more, much deeper, and come back to confirm with a trend line and key level, or whatever, Fibonacci, order block, support area, whatever your entry pattern is, then you cannot confirm this buy. It is a simple thing. It is understanding the flow of the river and not walking and playing against it. You have to know where you are in the larger scheme of things. Now, if this was a higher time frame, what you can expect is, if price has hit this key level and has started to reverse here, you can begin to take this by the time the 4-hour changes. If this was a weekly level and price hits it and reverses on the 4-hour, I personally can start taking sells. That is it. Because why? It is a key level on the weekly, a 4-hour change in market structure, which is an indication for intraday traders and short-term swing traders. That is it for me. But for this one that you are looking at like this, you can't use the 4-hour time frame for it. You have to now wait for this break and move. Simple as that. Now, let's look at this in a way and say, when can we now take sells? Let's go to the higher time frame. When can a sell at this point be valid? Honestly, the only way a sell will make the most sense for you is if a sell breaks this trend line, this daily trend line. If price breaks this daily trend line and retests some of these levels, you can have opportunities for sales because you're in a higher time frame area of any higher time frame key level and area of area of interest. Let me read that and go zoom in there. If price breaks this trend line, you can have a case for a sell. But before then, by any sell you take here, you are gambling. Because when price has broken this trend line, you have eaten up the momentum of the buys. And when I say break the trend line, a clean break. Then you wait for that 4-hour shift and starts to sell to these regions. Don't sell past here because this is a key level. When you get here, look for other information. If it breaks and continues, you keep on selling. If not, you wait for the 4-hour shift and continue. Simple. The market is easy, but greed is a killer. Patience is your best friend. Patience is your best friend. Be smart. Be smart. Let's analyze Euro JPY now. So, what do we have on Euro JPY? This is the weekly time frame. Like I always say, we look at what price is doing currently. We analyze, draw the key level. I'm sure by now I will be a bit faster now because I believe that you should start to get the hang of it. So this is the trend line. We have this trend line which is forming the momentum of the buys. We also had this trend line inside here which was forming the momentum for buys. You can have multiple buy momentum. Now I will delete this because I can see that since we have drawn this, let me just leave it. Price came and tapped it here and reacted from it. 4-hour change here, 4-hour daily shift, 4-hour shift, confirmation for buys. Let's go to So we have this weekly key level here. Is there anything else we can see here? I think the only other thing is this point on the weekly. Now let's go to the daily time frame. Good. The first thing we do on the daily time frame, as usual, is to have our trend line drawn to indicate market movement and direction. We have this price came up, retested, broke, and retested this trend line. And while it retested, a lot of opportunities for buys were here. Now, there's a daily key level here, but we won't draw it because it's already inside the weekly key level. Now, I will mark out this area as a daily key level because this high is a daily high. Small friction here, but I'm more focused on this daily high that was formed here. Now, I would have loved to draw this trend line, but the problem is that this move did not really break any structure here. So for me, I don't consider it valid. Since we have this, let's go to the 4-hour time frame. Now, if you look at this point, when price got down here on the 4-hour time frame, it formed a double bottom here, started to break structure. These were all buy signals, formed a ladder. If price broke this, well, if you are smart, you won't have taken it. But for those who want to take the risk, you could have taken it because it's too close to this daily key level. So what do we have currently on the 4-hour time frame? Where is the buy momentum on the 4-hour? We have this 4-hour buy momentum, which has just been eaten up. Where is the 4-hour key level? We have this 4-hour key level here. Now, this is where it gets interesting. Let's go back to the weekly time frame. The weekly time frame has showed this was a bearish indication. I don't know if you guys are noticing. I switched the blue for sells and the red for buys because for me it doesn't matter to me because I can as well have this chart as all black, all white, all blue because I am looking at the patterns. The color of the candlestick doesn't have much importance to me. It is the patterns that the price is making, the retest of the key level, the trend lines. I know I'm using patterns of how price, repetitive patterns, not the color of candlesticks, because you have to train your eyes to know these patterns so that you are not bothered about the candlestick, whether it is blue or whether it is red or green, but still do what feels comfortable for you. I'm just here to give an opinion, but you can as well always do what is comfortable for you. Now, on this daily time frame, on the weekly time frame, price hit this weekly trend line and started reversing. On the daily time frame, we are still momentarily bearish because price has cleared bearish structure while still forming bearish patterns here. Two things are going on here. Price also had this, let me put it back, this zone, this top here, that it formed a double top with, then had a shift in market structure on the 4-hour time frame. It had a shift in market structure on the 4-hour time frame by one, breaking 4-hour low and breaking 4-hour trend line. Interesting. What does that now mean? What it simply means is that we can still look for sells when price returns to these zones, these levels. We can begin to look for sells. Personally, I don't like the way this is. I don't like the fact that I don't have a clear direction. It doesn't still feel clear enough for me. Personally, I will wait for price to at least clear this low to confirm sells for me, or clear these highs to confirm buys for me. Within here, I will not take a trade. I will not take a trade because there is no clear direction. Now, despite me saying that, if price comes down, now because this key level is on the 4-hour, my entry time frame is going to be from the 15 minutes and 30 minute time frame. If price comes up to these key levels, so basically from here, from this point to this point, you can still look for intraday sales, scalping sales within these regions, as long as price hasn't violated this top and bottom. So right now the market direction is confusing. So when the market direction is confusing, give yourself as much confirmations as possible. Give yourself as much confirmations as possible, because here price broke all these bearish structures here on its way down, and see the high that broke it. It has not been broken again. You can even say this high has not even been broken. So it is a selling market. But price now came and also formed this low, and a higher high, a higher low, giving us buys. Now, if this price was actually here, that price came up to this top and gave me this reversal, I will be more comfortable with it. But this is just in the middle of this trend. I don't know if that makes any sense to anyone. Let me repeat that. If price had come to this high, which is an extreme, and made this reversal, I will be comfortable to take a sell here. But it is not there. There is what is the higher time frame information holding it up? Are you saying this trend line is possible? Maybe this trend line is also holding up price. It's also the reason why price is breaking to the lower time frame, but I don't see this trend line as valid. But or is it this level? It can be, but I would have been more comfortable if it was here. So to give myself extra peace of mind, I would like price to continue to form more lows, and I'll be comfortable to take it down. That is just it for Euro JPY. Now let's look at Bitcoin. Let's go to the weekly time frame. So let's check the weekly time frame now on Bitcoin. First of all, this is an extremely bullish market. On the weekly, we mark the key levels. We have framed this price here. Good. There's really no trend line to be drawn here, but just so that we are maintaining consistency, we can still just draw this, which is the trend line on the weekly time frame. On the daily time frame, what do we have? We have this level. You have this low here. Price came, tapped here. Price this low hasn't been broken here. It has formed. So this low that gave rise to this top, and price has just been reacting there. So this point, I'll look at it as a key level area. It's on the daily time frame. I can't see any real trend line to be drawn here. Let's just delete that. Let's go to the 4-hour time frame. Now, because price has come here, tapped here again, what we are looking for is, we know that until price breaks below this level, we can't look for sales. So if we have to now take buys, what it simply means is that price has to now violate 4-hour structure, and this is the last 4-hour structure of significance, because price came here, broke, retest, broke from this double bottom, came here, broke here, good. Now, another thing we can look at is this. When price came here and formed this 1, 2, 3, we can look for the shift in market structure. We can see this minor 4-hour level here. That if you look at this last week, let me zoom into this area a bit. If you look at this week here, let's put a line there. If you look at it, you see that it was broken here. That low was broken. So this is the high that broke it. That is clearer on the 1-hour time frame. This is now getting into 1-hour time frame on how we can also begin to frame price just a little bit better to catch those early entries. Because if you look at this point here, here, you can say here, but this is not enough. This is the level. Price turned. As soon as price broke this key level and these highs, and if you look at here, it formed its own double bottom here. This is a reversal pattern. We can take early buys as soon as price begins to return back to key areas here. So for some people, who you can as well begin to look at this whole zone, this week here, and look for your entries depending on your own entry parameter on the 15 minutes stroke, even the 5 minutes for a trade like this. For me, I don't know. My entry, I use a lot of counter trend lines with a lot of confirmations from, I use it sometimes, confirmations from the RSI and whatnot. So you could have taken this, and the break of this counter trend line here, you could have taken this buy, because you have frame price, everything is in your favor. Remember, there's no 90 days, you can't win all the time. You can as well take this and still lose. But if you continue to do this methodologically and systematically, continue to do the right thing over time, you will be on the winning side, because you will allow the market flow of river, the market edge, the market direction aid you in having profitability. You must understand that this market is not, you can't win all the time, but doing the right thing consistently and all the time will make you a winner in the long run. That is just all this market entails. So basically that is all I wanted to cover, but for the sake of it, let me just cover one more. Let me just break down one more chart. Let's say US 30. Let's go to the weekly time frame. We can, first of all, like I said, we just frame the weekly, look at where the momentum is on the weekly time frame. Then we can now look at drawing the weekly key level. This low is the weekly low. Okay. And this weekly low, price has come. Now we draw this trend line on the daily time frame. This is the momentum on the daily time frame, and price has broken it. Good, no problem. So what do we have on the daily time frame? This is the daily key level here, because this is a high, price broke it, formed a low, and price has come back to it. So when price formed this high and this low in this same location, is automatically a key level, even if it did not even form that, even if it was just only this one. For the fact that this low is here, price always returns back to previous lows and previous highs. Price also can as well have done this and returned back here. Price likes to chase where it has been before. and also price has broken this daily momentum stroke trend line. All right, let's go to the 4-hour time frame. Upon the retest here, there was an entry here. I marked this up and I took a trade here. I didn't actually take it, place the buy, sell rather, but I marked it up because the way the US 30 moves and the way it's the pip count, I'm not really comfortable trading it on a smaller account. So I just marked it up. Now on the 4-hour, what do we see now? On the 4-hour, we have this 4-hour highs, and we have this key level which is forming a double bottom here on the 4-hour. A double bottom on the 4-hour. Now, this is where things get interesting. What are we now looking for in the market? I will show you two things, and this is more for advanced and someone who is a bit more of a risk taker. If price is here, where are the buy positions? Personally, the buy position comes above this level here because this is the last 4-hour high. When price breaks this level, you can look for buys to just this key level here, but that's risky. The better option would have been a breakout of here and a buys to continue. And the best position for sales is a breakout of here and a continuation for sales. Now, let's go to the 1 hour. This is where we can also begin to frame price, with a bit more, with much more intricacy. Now, what do we have here? Let's refine this point. This is the 1 hour key level. Why is it a 1 hour key level? It's a low, high, broke, high, broke. We also have this point here. So this is a high that broke this to confirm a sell, and this sell was what broke this level. So we have this high that broke this sell. So within this small structure here, when I mean small structure, within just this structure here, price is bearish until price takes out this low, that high, I beg your pardon. Now, what does it mean? If you look at this on the 1 hour too, we have this trend line here. This is where it becomes a bit interesting. So if now you are a scalper and an intraday stroke, intraday scalper trader, and you're a risk taker, you can begin to look for buy and sell indications around this zone, around this area. But remember, it is dangerous because when price came and met this key level here, it is a high probability that it can blow past this and start its reversal. Because in this small structure we have here, the 4-hour time frame is our higher time frame. And you have hit the higher time frame, which is your 4-hour, in this instance, the key level. So you are beginning to go against it. So that's something to keep in mind. So you can begin to look at, say, when price begins to violate this momentum, this is a high indication for sales. If price violates this indication, this momentum, you can look for your own entry parameter. I'm not teaching you how to enter because everyone should learn. We have to have a way to enter the market that resonates with them personally. And if your signal is not there, it is not there. My aim here is just to teach you market direction and use technical tools to aid you to make the informed decision. Now, why am I teaching you this? We know that we can take a sell from here, but we know the risk involved. We know where the pressure points are. We know the positions where we should have been more, where we should have been safer to buy and where it would be safer to sell. So when we are making these decisions, we are now cognizant of the fact that we know what the market is doing, and anything it does, we are willing to accept it because we made the mistake either to buy, or we did the right thing either to buy or sell. So we have to be conscious of the fact that the market goes in buys and sells, but at every instance there is a direction that has a higher probability. To remain profitable, you should always trade in the direction that has the higher probability by stacking more confidences from the higher time frame as you go. But remember, when you have reached a certain level and you have become more advanced, you can begin to now fine-tune it, make more nuanced decisions, like coming into the 1 hour time frame, understanding the higher time frame picture of the 4 hour, 15 minutes and whatnot, and begin to take smaller short-term trades. But you must understand market direction in a larger scale, not arbitrarily taking buy, sell, and not recognizing that there is danger above, there is danger beneath, and whatnot. Well, this video has been a bit long. I just hope that you have been able to gain something valuable from it and have been able to open your eyes and educate you on how the market direction works. And please, if you enjoy this content, just keep me motivated. Like, subscribe, comment. Your comments, your contributions will go a long way to let me know that you understood, or you did not understand, or you want something more, or you want some more clarity from me. Please let me know in the comment section. Like, subscribe, share. Let this channel grow. We are building a community. I have so much to teach. So much. I've been trading for almost 5 years, and there is no mistake I have not made. There is nothing I have not experienced. I want to shorten the time it took me to learn and become profitable for someone else. I want you guys to begin to make money and change the life of your family and your generations forever. That is my mission. But please, let's go on this journey together. Support, help, like, subscribe, and share. Thank you very much. Have a nice day. God bless you.